All right, here we go. It's Mr. Anderson. I hope everyone's doing well. I had tremendous feedback after the last video. A lot of people thought they started to see something. At least that's the way they expressed it, so that's good. That's exactly what we want. I completely expect, as I've told you guys many times, and I'll always repeat, I expect confusion. I expect you to be lost and concerned and wonder. But what I'll also repeat is that I want everyone to have the same mindset, which is this: see the end goal and know what it is. And if you know that that end goal is you learning how to trade successfully, whether that means you're pretty good already and you want to become great, or you just want to become proficient and build on that so you can make a profit in any market, see that as already being an inevitable end to this process. I promise you, this isn't a self-help book. It's a reality that if you see it and know it and speak it, this isn't rocket science. I've said this over and over again as well. I'll just repeat myself over and over again throughout the next year. It's not rocket science. It really isn't. It's not a brilliant mind. It's a disciplined art. Can you be disciplined? Because the details that you're going to learn are things that people can pick up. It's just a matter of staying calm, following rules, and doing so in a pattern and a mindset of, you know what, once something goes a little bit against me, I'm out, and that's okay. The wins will come. No fear of missing out. No worry if you missed a trade. Those are for amateurs. And if you think that way now, then perhaps you're an amateur, and that's okay. We're talking about getting rid of that mindset. But the point here is I want you to completely visualize the end of this road. The book ends in you becoming a successful trader. Therefore, between now and then, it's just the process, right? It's just whatever is going to occur between those two times. So no matter what does occur, no matter how frustrating it gets, if you already know how this book ends, you can have a little peace of mind and understanding that, you know what, I am going to get there. So some people saw the light, which is great. I wanted to let that marinate. Hopefully you guys watched the video a couple times, maybe a few times if possible. Do that. But I also want to talk about the state of the market. I've expressed myself and let people know that I don't think anyone should be trading right now, because if you're in crypto, this market isn't great. Now, if you find some, obviously you guys are sending me trades. I see, a couple guys nailed OCN, which was a beautiful trade. God bless you. If you were watching it, terrific. I didn't personally. I'm not on Bittrex to watch that. So I used to be, but I have my issues with Bittrex. So, but ultimately, the point is, I know some people did. I know some people have been shorting Ripple here and there. Some people shorting some other coins that I don't even pay attention to, which is great. Those are all good things. But overall, you see what's in front of you, right? That's Bitcoin. And I want to show you. I drew a couple lines just now before I started. Must have turned my drawings off here. I'm going to make sure I don't erase them. Hold on a second. Oh, might have to redraw, which is fine. I want to basically show you why I'm telling you there's no reason to trade. If you see a trade on a low time frame, you want to take it and it runs into something great, that's fine. But the reality is this market is choppy. Why is it choppy? Let's look at it. First and foremost, let's just look at this last couple weeks, right? Get a little drawing tool right here. We're going to go from the high close of the last few weeks through the higher low close, meaning you had this formation, right, which is a bit of a higher high. This is, obviously this was a low, went to a high, came down to a higher low, but this is a lower high, right, lower than this level here. And then here, possibly a higher low, but so far, again, a lower closing high. So we draw a little line. I'm not huge on diagonals, but we still want to pay attention. Sometimes they matter a lot. And we could see that the line that we just drew has been rejected 1, 2, 3, 4, 5, 6, 7 times. To break that down, what am I talking about? Basically, price penetrated this line that we drew and was rejected. You see the long wick and closed underneath it. Once, twice. In fact, if you can count that one if you want, but let's not. 1, 2, 3, 4, 5, 6, 7, 8 different times. So hey, the line means something, right? It's somewhat meaningful, even if it's there just to fool people, and that might happen. Maybe around here they start saying, "Hey, we break this line, we're going to break out," and really they got caught. And the same thing here. The same thing here. The same thing there. Maybe there as well. So these could be traps for sure. They could be a trap. But at the moment it matters. And then we're going to go ahead and we're going to look. We can draw this a couple different ways. We can say we're going to go from the low closes, okay? So let's keep it tight first. We'll start from within. Let's say, all right, today where we're at here might be a low close if we draw that line. We could say we're in this particular range, okay? The other way we could have done it, we could have done something like this to go a little bit further back. And maybe you're looking at something a little bit bigger like that. Obviously, you can no longer go from here to here because you're out of that range. But if you want to look at it, I will show you. Some people, they might have had something like this. But truth be told, you broke that a while back. So I don't look at those type of things. I mean, you can, there's ways to look at it and say, hey, you know what, you broke through, the line still matters, it was rejected here. I don't look at it, things like that. I'm not big on these diagonals in general. I'll utilize them when necessary, but let's just keep it like this for now. So we're going to look at something to where we say a bigger range might be something along that line, a tighter range is something along this line. But either way, what do we see happening? A range that's shrinking, triangle, which we've talked about before, and the triangle is called a coil. You can see we're having a little drop right now. So anyway, there's a coil in effect. And the coiling effect means a tighter range. Now, perhaps we're trying to come out that range. I can see we're dropping right this second. But ultimately, we have to discuss the idea of what's happening. And during this time, while we're in that range, you're getting choppiness in price action. And that means you're going to get choppiness in your indicators. If we zoom out and look over a longer period of time, we can see that this is actually something that has existed for quite a while. I mean, we can continue to draw our lines and continue to have this type of triangle formation. I'm not going to do these perfectly, but you can see how long we've been in it. And we zoom out even more, it becomes more of like a descending type triangle, but technically you could do something like that. You have this day that broke, but immediately rebounded, and something along those lines. We have to extend it a little bit for that, which would be fine too. But the key is this: look at the range. The range was from 6,000 to 12,000. Then the range was from, in this case, at top to bottom, 10,000 down to about 5,700. So you had about 6,000 in this range, about 4,300. Then you had a range of 5,700 to about 8,500. So now you're talking about further shrinkage in that range. Then, most recently, 5,800 to about 7,400. And now this most recent one, 7,400 to about 6,100. And now, if we come back to modern moments, we're talking about a range here of 6,300 to 68 of 500, which is extremely tight, right? So what does that mean? That means everything's coiling, everything's in a triangle formation, it's coming to a head, the volatility's down, the volume is way down, the range is tightening on both sides, and highs and lows, except right here we're getting a little bit of something, so we'll see what occurs. For the moment, I'll just back this up and just kind of leave it at that. Let's draw this way, just for the sake of this conversation, because obviously we're getting movement right now, but for the sake of the conversation, the idea is that the range is tightening, okay? So here we go. We know we got a tightening range, so what is that going to mean? Well, first of all, if you have a choppy range, you're going to have choppy signals from an indicator. Why wouldn't you? Let's bring up an indicator. Let's bring out something like God's Eye. There it is, God's Eye 2.0. So when you have a decent range and a decent movement, you're going to have a situation where you get a nice signal and a huge move. Nice signal, big move. Nice signal, nice move. Nice signal. Even though this range was getting tighter, it was able to do this. But then what starts to happen? Did something change? Do the signals no longer work? No, of course not. It's just that the range has changed. So first of all, where you're getting these tops, this is a momentum indicator. This God's Eye, right? So the momentum was changing at the bottom, changing near the bottom here, changing near the bottom, and you're getting these upward momentums, changing near the top, right? That's what you want to see. But what happened here? get 1, 2, 3, 4, 5, 6, 7. The 8th day. It took 8 days of bottoming action and slow upward movement for this indicator to show a buy, which basically means that the momentum has finally changed. And what we find out is that's what's called a head fake. When you get a signal and they immediately go the opposite direction, well, it's like a setup, basically. The people know what's going on, even like this last short right here, if you can see on the screen. After big shorts, you had a couple counter trend moves, but basically had that and they reverse it immediately, which is normal. That's how it usually ends. But the idea here is that you're in a situation now where you went buy, sell, buy, sell, buy, sell. And some of these are fine, but ultimately, this last one, maybe it's going to be a wonderful signal, but how could you trust it right now? How could you use God's eye on a high time frame? And the answer is you can't, right? You absolutely cannot, because things are coiling. So until we get ourselves into a situation to where we're outside of this range, and although I drew this, excuse me, I know I'm showing you the triangle because it matters, because I want to show you that the range is tightening, but although I'm drawing it like that, the reality is this has been a horizontal support. That's why I drew it that way this time. And another horizontal resistance would be something along these lines right here. So we would turn that red normally. I'll go ahead and do that. So until we get outside of these two lines, really we're range bound, right? You see a little bit of rejection already happening right at that line. We'll see what happens if it holds throughout the day, or if we can finally see some movement, and then you can consider the idea of entering some trades. Now, of course, you're an adult, you can do what you want. But that's just from my perspective, that unless you're seeing something happen on a low time frame, is there a real reason to do that? Because ultimately, like I said, an indicator, when it sees something down, it's going to tell you down. The indicator can't predict the fact that you're going into a triangle that's getting tighter and tighter and tighter and tighter. And I'm making this huge, by the way. If we make this a normal size, you could see how unbelievably, ridiculously small this is, this particular range, relative to the chart that you normally look at. This is a standard chart that you would bring up, and we've shrunk down tremendously. This is something that is dramatic. There were times where we thought we were out of this range, right? There was times where people would have drew this like this, right? And it made a lot of sense back then when it was like that, because you saw that, we saw a drop coming, and people thought, oh, we're breaking out of this range. It was actually, excuse me, let me draw this differently so I don't confuse you. It was something like this back then, and people thought, hey, look at this, we're breaking out finally of this range. Things are beautiful, and what we found out is we just fell back in, and typically that's the problem that I have with some of these diagonals, is that you don't really know if you're drawing the right formation. They morph, right? When you draw them like that, what you're drawing might make a lot of sense. It looks pretty. Horizontals you can really trust a lot more. It's just that with these particular diagonals, you never really know, is that actually the pattern? You know eventually, and there are some that are stronger than others when you start getting to classical charting. But this one makes a lot of sense, of course, and regardless, what we do know is the range is tightening, and there's certainly some sort of triangle formation. So we just want to keep that in mind so that we can protect ourselves and understand that, hey, the environment isn't conducive. So that's a key indication for you to understand that, hey, you know what, I can watch during these times, but I can wait for a better setup. And I want to get that point across. If the market moves 3,000 points down or up and I miss it, I'm not worried about that. What I'm worried about is a proper trend that I can be involved in, and I can play that move. I hope it does break out that amount. Trust me, I will work on a play that will work out wonderfully after that fact, and I have no issue. There's always going to be a market there. There's always going to be a move. Okay, and we don't want you to start having any worries about your indicator. Or does it not work any longer? Hey, like I said, you go back in time and you can see that when there was movement, there was no issue. You're getting strong buys, you're getting shorts, you're getting your buy, you're getting your shorts. Everything was fine, right? So keep that in mind. There's no issue there. It's just that you're getting into a tighter range. Even on the daily, it's worked out pretty good, where you see that you were getting buys here on something like the Golden Child, which is great for high time frame. But still, when you get into those lower time frames, those ranges are tightening as well, and you're going to get a lot of chop, what we call chop, up and down, which is fine on these larger scales, but when you start getting tight like this, that's a whole different ballgame. So I really want to get that point across, make sure everyone knows that you don't have to feel that obligation to trade right now. there will be plenty of money on the table for you when you're ready to trade and when the market's giving you the opportunity to do so. Now, let's move on though. What does it mean? And I wanted to talk about a couple different things. What does it mean when I say that all the moves are happening on low time frames? You probably hear me say that a lot. And I realize, you know what, some people probably don't even know what I'm talking about. So I want to bring up this price action channel. Price action channel is basically something to where, I've explained it before, but ultimately this is a good guide to see if the market is in fact moving, right? A price action channel is a channel where if price is in it, it's basically somewhat of what we would call a fractal. We're getting a lot of sideways action. And you can get them outside of the price action channel, but you're just not getting significant movement. It's basically something to where you want to monitor depending on your time frame. Like in this area, basically, are we going to go up? Are we going to go down? You're not 100% sure until you get outside of the channel, and then you can see there's a move. From here, it goes edge to edge. It falls outside from the top side of the outside of the price action channel to the downside, and you get a move. But then when you get back in, slow chop, you tried to get out, didn't really happen. Tried to get out, didn't happen. So, again, getting back to the point, what does it mean? Well, this is a daily time frame, right? So the price action channel is a great way for you to identify what time frame is the play itself, meaning the move, taking place on. And I'm going to use this area right here to kind of give you an example. Let's just go ahead and pick that area. I'll make it larger. So what do we see? This is a daily time frame. And, we were skirting the lines of the price action channel. Even here, before getting to my example, I'll get back to this in a second. Let me just use my example, which is this period. Sorry about that. All right, so basically, here we go. Price moves out of the channel on the high side, and we're getting an upward thrust. And we see day 1, day 2, day 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. And these are sideways days, whether you count them or not. It's between 13 to 15 days, let's say, of an advance, right? So that's a 13-day daily scale move. So when I couldn't have said to you, hey, things aren't working on a daily time frame. They were, right, at that time. Let's get back to that golden chop for a second. Let's see what happened. Buy. Perfect. You had a perfect buy. You even got a reconfirmation, of a buy here as well. So during that time, when you're seeing an active move, your indicator did you justice, took care of you, right? But when you're inside in a choppiness, you have to worry a little bit about, what your indicator is telling you, because it's, back in hindsight, we could see we had all of this area, right? But getting outside of the channel with a signal, we could feel a little bit more comfortable that, hey, you know what, we have a better shot now with this particular signal. Even here, when it went short, whether you took that or not, eventually did fall out, so you might have felt more comfortable. And look at this move. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days outside again. And I said I would come back to this example right here. Even this little one, from the channel, 1, 2, 3, 4, 5. So these are daily scale. So you might say, well, wait a second. If that is a daily scale play, who's to say that it's not also a 6-hour play? And it could be. This could be a move that started on the 4-hour and held on the 4-hour the entire time. But I'm going to bet against it. I haven't looked at this, but I'm going to bet against it. I'm going to give you an example. Let's go to a 6-hour. I'm going to squeeze this up and find that range. So here we are. Here was our box. All right, so on a 6-hour, we could see something similar happen, right? It started on a 6-hour, came back, and for a long time, look, the 6-hour did hold, right? So this was a 6-hour move for quite a while. But we do see then that it did come back into your price action channel. So although a lot of the move happened on the 6-hour, we also see that here again, back on the 6-hour, we see a lot of them did not, right? So technically, sure, it started on a 6-hour, but there was a couple different moves. Let's go to a real low time frame, not low, but let's say a 1 hour as an example. I'm going to squeeze this up, and this will give you a better idea of what I'm talking about. On a 1 hour basis, of course, it's going to start off outside of the channel, right? Everything, we're looking at the same thing, but look what happens. Much to your surprise, probably, it's not outside the channel all that long, and then back in, and then finally gets back out, but then back in again. and we're getting a lot of sideways action. In fact, it hangs out and even below. So this is a lot of chop, right? And this is going back to the last video where we said, you wouldn't be doing a counter trend play here. You'd be very careful with these shorts, and you would know it. But regardless, the point is that on a 1 hour scale, the move was not happening. It was absolutely happening on a daily scale, and a couple moves happened on the 6 hour, which is fine as well. So I'm just trying to paint that picture, and I'll cycle down all the way down to like a 15-minute for you, just so that you have an understanding. I'm gonna have to bring this really tight. Find my box. On the 15-minute, the data is going to take a little bit longer to load because it's a lot of data that we just condensed, so forgive me. Probably doesn't help that I have at least 200 windows open at the moment. Alright, I don't know why this isn't working, so I don't want to bore you guys too much. I'll give it another second. If it doesn't come through, I'll have a sip of water. Alright, well, since this doesn't want to play nice, let's see if it'll give us a 5-minute, excuse me, a 30-minute. Alright, 30 minutes seems to be working. And what do we see? We see that, to even further extent, the 30-minute was not the time frame that you were playing. You could have had multiple plays, 30, outside the channel again, in for a long time, choppiness, and really didn't get back out to up here for a little while. So there wasn't a lot of plays on that time frame. Now, still, you could have played it well, but you could see there's small doses on a 30-minute time frame, and then otherwise you're sometimes even below the channel here. Hopefully this wasn't too small for you. I apologize, but I'm just trying to make a point of what I mean by when I say, hey, you know what, this isn't being played out on that time frame. But let me go back to a daily, and I want to switch back to what we're looking at here and now today, and what the market's been like. Because I want you to understand this point. It does matter, because ultimately it'll help you get a little bit of clarity as to why a particular time frame is very important, and how you can kind of figure out what time frame it's being played on. Alright, so now here we are. And we're focused in on the most recent period of time. Now we see back here, going back to early September, there was a daily move. We had a huge move down, and 1, 2, 3, 4, 5, 6, 7, 8 days outside of the price action channel. But even still, even at 8 days out, considering the move, this was a sharp move, and this is actually one that I would tell you, you know what, in all likelihood, this is probably something that I might consider that a 6-hour time frame because of how sharp this move was. So it can be both. You can have like a 6-hour H6 and a daily if it's really sharp. Yeah, and it does kind of work out that way. You see, on the H6, you were basically outside of that channel for the majority of the time, and I would consider this out as well, considering you got the rejection, and then finally back in. With the daily, you were out a little bit longer, but regardless, you got the point there. So let's get back now to the modern day, meaning right here and now, this particular fractal that we're looking at. And what do we get? Right after we had that one move, you had part of 2 days outside of the channel, part of 3 days outside of the channel, but for the most part, you're right in. That means sideways, that means choppiness, that means no action. That's why it's called a price action channel, right? There's no action. And in fact, I wouldn't even consider this a move. I would consider it a move out and a fail. A move out and a fail. Why? Because there was no advance. You see how here you had an advance outside of the channel? No matter which direction, you can call it an advance, you can call it a decline. But ultimately the point is that the movement accelerates to that direction. The movement accelerates to that direction, right? Whereas here, these are head fakes. You got outside the channel and immediately reverted back. Outside the channel, a little bit of a triangle. This is a triangle. And back in. And then it's even bouncing a little bit back and forth between the price action channel. So you're not getting the action that you're looking for on a daily scale. So let me take it down. Let's go down to that 6 hour then and see, you know what, Mr. Anderson, maybe it's happening on H6. Not really. Look at this. You know, you had 4 or 5 bars. You had a little advance, but 2 red candles, 2 green. Right here, there's a little bit of a down move outside. You had a little fight there, but then finally So nothing's happening, right? Nothing substantial. By the time you jump in on this time frame, you're going to get stopped out, right? You're going to get in. Hey, look, maybe we're advancing out the price action channel. Chop, chop, chop. Probably take a small loss. Maybe you make a small gain if you got in early enough. But nothing substantial on that time frame. So we even go down to like a 1 hour. All right, well, let's look at a 1 hour. You know, we're going back here almost 2 weeks. And I'm going to make it larger so we can see. And what took place? I mean, we had one move, but look at the size of that bar. I would argue that absolutely did not happen on a 1 hour. Now, it extended, right? But, you know, I want to look at this. I got to take a closer look for you. Let's look exactly at that particular area of the big bar on like a 15 minute. All right, it's kind of what I thought. So, what happened? Basically, the majority of that bar happened in a 15-minute time frame. And look at this, not much of anything, right? So you had this huge jump, 6,500 to about 6,600 and change, 6,680, 180 points in the tight range that we have had, and it's been one jump. I mean, even if you go to lower time frames, now we're on a 5 minute, right? 5 minutes is such a tiny time frame. And you're still not getting a tremendous amount where you're outside of the price action channel. There's not a lot of action, but there is some, right? So when I say, hey, you know what, all the action is on low time frames, there's not a lot of action, but when it does occur, it's happening here. So if you're, you know, a person that's trading with leverage, and you know, look, we're in a tight range, I'm going to get in and out. And I haven't even been making these trades lately. But if I had time, maybe I would, but ultimately I haven't. So you can say, hey, look, we're out of the range here. I'm sure you got some good signals from a scalper. And if you want to confirm with the scalper, you can do that as well. Look, you got a perfect short. Ultimately, if you waited till it got out that range, okay, perfect. You would have a nice scalp. Wait for some rejections, get out. So that would have been a nice move. You know, these are ways to play it. Same thing. You're getting a short that did finally come outside a little bit of the price action range. Same thing. Right when you seen scalp, you could have went back the other way a little bit. Or you might have got stopped out because you see short again. You know, this one would have been a bad one. I don't want to always make it seem like they're all good. But the idea is that this is what I mean when I say these things are happening on low time frames. The only action, the only playable action is a 5 minute chart. I mean, if we look at a 15 minute, there might be some moves you could play, but there's not a lot. Get this out the way so I don't confuse you. Just look at the price action channel. Same thing. I mean, it came out here, so you had about an hour. If you happen to be watching it for that hour and 15 minutes, you first of all might have been put to sleep by all this, but if you were watching, then finally you might have caught it. So my point is, this isn't the most conducive environment to say, hey, I'm going to trade on a 1 minute, a 5 minute, 15 minute. If that's your cup of tea, then there are some trades there, and you can do well. By looking at support and resistance, which we touched on a little bit in the video. Of course, we're going to dive into that much deeper soon. But I just wanted to take a moment to explain this, you know, what it means to be having everything happen on a low time frame. So now you can have a little bit of an understanding as well, because ultimately what the majority of you guys would probably like to see is a daily move that you can play, right? An H6, a 6 hour move, that's playable. Or some type of action that consistently gives you play. I mean, we go back again to the daily. Whenever we get out of this tightening mess and start to see some normal action, I don't really care which direction it goes, you can see that price action moves are a norm, right? Let me get rid of these boxes now. In a normal market, let me give you something like Amazon. Alright, look at this. This one's already got this element, this one boxed off. I must have been looking at this for some reason. So, perfect. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. You were 17 days outside of the price action channel on Amazon, right? So, also let me look at something like this. Big surprise. Golden Child gave you a buy right there. See this? When there's proper volatility, I want you to feel confident that you already have the tools there for you. Okay? You see on Amazon how you caught this move before it occurred, but even if it would have been here, that would have been fine. But either way, right before it happened, got outside the channel here, spent 17 days. Technically, you could say you got out here and kind of held the line, which is fine also. So maybe you're 20 days out. But ultimately, you're in a situation to where you basically caught a move and we're able to ride it. I mean, that's what it's all about. And then from there, some of the rules of the previous video, which I'm going to make another video, which you'll receive by tomorrow as well, which will get in a little bit deeper to the subject that we discussed. But I just wanted to let the last subject settle in with you a little bit, let you rewatch that so you don't get overwhelmed or confused, and then start to kind of explain, where we're at right now, why things are happening on a low time frame, and why that's probably not the best environment for most of you. Of course, you have every right to trade. It's your money, right? So feel free to do so, but just know that there is a word of caution to it. My particular advice is be patient. If we have to wait through another week or two, don't worry about it. The trades are going to be there, and the end of the story ends well, especially when you're patient. You always want to protect your money above all things, okay? So that's it for this particular video. We'll see what occurs here with Bitcoin. We'll see if we get some price action. If we do, terrific. We can start talking about what the next step is. I'm happy to explain that to you. If there was something there, trust me, I'm not going to just let Bitcoin, if I see it. By the way, I can miss the move, right? If I miss the move, I'm perfectly okay with that. But if that were to occur, that's fine. I'll try to catch the next move. But if I see something crystal clear, is the point I'm trying to make, I'm going to let you guys know, of course. I'll let you know my opinion. I try to be careful because I don't want to create a bias in your mind that affects your trading, because it would be natural that you would say, all right, well, listen, that makes sense. I'm going to listen to what Mr. Anderson says and trade his way. Why? Not at all. We want you to learn to fish, right? If I give you a fish, you'll eat today. That's great. Maybe you'll make some money off the trade. Maybe you won't. Maybe you'll lose some money because I made a bad trade that time. But if I teach you to trade patiently, take your time, learn to trade, you're going to eat for life, right? You're going to be able to trade successfully for life. A lot of people that give these signals, most of them are terrible, I promise you. I've looked into those particular groups, and they'll run well, and then they'll run terrible. So when I see something, I'll let you know. I don't try to act like things are so important that I got some magical formula. Obviously, I know how to make things like indicators, and I have a passion for that. But simple things like this price action channel, these are the type of things that institutions use. Right now, of course, institutions these days are using a lot of the algorithm bots and things of that nature. But coming up in my day, the way they traded were a little bit simpler. And believe it or not, the algorithms are much more based on something like a price action channel than you would realize. So meaning you get outside of this price action channel and a set of algorithms starts to buy, right? That's why you see this move. It makes a higher high. On top of that, another set of algorithms starts to buy. So that's why when it's outside of the price action channel, you want to get involved, if possible, and start to watch and play and participate in that rally. That's the idea. So a lot of people, they don't have any clue what institutions are doing, but this is exactly what they're doing. They're not doing something that's just so complicated and amazing. No, they're getting involved in the momentum of a move. By the way, in case you're wondering what this is, since you're seeing it, I guess I'll show it to you. This is something that I put out. You might have seen it already. That means slope matters. Basically, the subject was done that we were talking about, but since I don't even know how I got to this, but I'll show you, because this is important. This is something about market structure, and I put this out, and it's always harder to explain in a tweet than everything else. So what is this? I got to keep it small, unfortunately, because of the lines I already drew. But basically, slope matters. What's that mean? Well, in a market structure, what you're going to have in a downtrend is that you're going to be able to measure from your top right here to your lower high, and it's going to have the amount of degrees, in this case 38 degrees, and then top to lower high, which in this case is 36 degrees. We had one here, but it was sharper, so that wasn't the top. That it was more than 38 degrees, so that was not the lower high. In fact, we've seen that worked out, that we had another run and it ended up being a double top, so 36 degrees. And what has to happen, because slope matters, is that in this action, you will always have a next top, unless this thing is going to zero, and that's a whole different story. But other than it going to zero, the next top is going to be at a sharper degree. 38, 36. This one happened to be around 15. These aren't perfect, but it's giving you a rough idea. This one happened to be 15. And then the next one was 12. You had a 15-degree move, and then 12 to here. That's why this wasn't the local top. You see how it failed? I had made some notes here. I said you see these areas here. Well, because this rally didn't make it to here, this absolutely was not a higher low. What we were trying to see is that there was hope of a higher low. I didn't review this because I'm trying to get through, because I know it's already getting long for you. But basically what I was explaining is this. You had your higher high, we started to break down. You had a lower high, a lower low, but we didn't have the next higher low until this period. This was your ultimate lower low for that time period. And then we went to a higher low. People had hope. This was a big hoping time period where people said, hey, you know what? We're starting to build. This is a higher low right here. We're going to go and move to the races. Well, the reality is it was not. And even to start a tight consolidation, we would have had to make it to this line. Okay? If you don't understand this right now, don't worry. But the idea is that once it started to head down, it was a failure. And that was something that we knew we were going to go lower. And sure enough, we did get a lower closing low. See the closing low? Right there. So we saw a lower closing low, and we saw a great consolidation period. And then finally, the next lower high was official because of the slope. See the slope lowered? You went down to 15 degrees here. And you went down to, where were we at? We were at 38 to here, 36 to there. Yeah, 15 to there. So then we had another one right there. Let me zoom in for a moment. I was going to mess up my chart, but just trust me with the lines. Is that here we had another situation to where this is a nice pivot. We thought, hey, look at this. We're going to hold. We're building on something. But if you notice, we were outside of the price action channel, and then all we did was get back in. And because it never made it to this line, which was basically somewhere in this area, immediately when we started to lose it, we failed dramatically, right? So we had a dramatic fail, and yet again a lower low. And in fact, we even took out the intraday lows on a closing basis. And this was tough. You had that inverse head and shoulders reversal and a huge run. Finally, just to shrink this back up again to the next lower high, because slope matters. And if you're not understanding this, it's okay. Eventually, we'll try to maybe explain this in a little more detail. It's not all that relevant to anything that's going to affect your trading, but it is important to see and kind of understand, or at least helpful, I should say. So here we go. You got slope matters now. So finally, you made it back, and it wasn't much lower, but it was a 12-degree slope roughly. So you went from a 15-degree to a 12-degree, and then it failed. A little bit of a double top again, some rejections, and you lost it. This was the latest current hope, and I drew this. We were inside this box when this was happening, and everyone was saying, look, another higher low, the bear market's over. Everyone was preaching how it's over, it's done, and I had this little question mark outside the box. And what I said is, if the bulls don't make it in here, then we know what comes next, which is this. Dump, right? You see the boxes here? If you didn't make it, you're going to get a dump for not making it to the line, a dump, right? Same type of scenario, right? So that was the idea, is that when you had the hopes previously that failed, you had a dump, and then of course what happened is we didn't make it to that line, and of course we had a dump. So that was basically the idea and what I was trying to explain to people. And this might look small, but that was a mega move. And the key is, just to create the next higher low, we have to reach this line. To create a higher high, technically people, I know they're going to freak out when we go over 7,400. It's like the bear market's over, and it might be. But it won't be until we break this line, 8,500. Okay. Now that means that you might call it here, and ultimately end up being right, and it'll look like your call was more accurate. But that's not how TA works. Okay. This absolutely cannot be counted on. Why? Because slope matters, right? And official higher low will be one that touches the slope. Now it might not have to occur. You might have a situation to where it runs through. Great, that would be perfect, and you take out this level, and that's fine. But still, we got to work on the time frame we're dealing with, so we're going to focus on that level. We're going to focus on these levels here. But I do want you to know that, technically speaking, what should happen is you should make it either to this line or inside this box would be nice and aggressive. Even a double top would be awesome, where you probably can get the bears saying, hey, you know what, we're in a bad spot here, and the reality is you'll peel back, and then the bulls will take over, and you'll take off a little bit. I don't mean a mega takeoff, I'm just saying start in advance that we can work on. But the idea is that slope matters. If this thing breaks down, right, now back up here a little bit. If this breaks down all the way down here for 8 months, you see this line? This is the slope line that I'm talking about. There will not be a higher low until this line hits again. You might say that doesn't make any sense. It's higher right there. This would all be part of the same structure up until it pivots and then finally hits here. And what will happen is, I'm going to mess up my entire chart, but things will get squeezed in, and you'll never notice this little one again, because you'll end up having that higher low, somewhere, let's say there, as an example. You see, when you squeeze it in, suddenly it looks very different, right? So the idea is that, if you get to a point to where you're back in this several months down the road, that's going to be your higher low. It's such an important element to understand, because then you're understanding the true market structure of bulls versus bears. We're in a bear market. A lot of people say, oh, we're not in a bear market. I don't know what they're talking about, what world they live in. You go down 20%, you're in a bear market. There's no other element to that. It has nothing to do with the ratios, and you hear all kinds of different things that people say that, oh, on a weekly scale we haven't taken out this, we're not in a bear market. This is a nasty bear market. There's no other way to look at it. And if we lose this level right here, we're going to have a secondary nasty bear market, in my opinion. I could be wrong. Maybe some news changes that, so be it. But that's the likely scenario. So ultimately, just want to kind of run that by you just because it happened to be on the screen. I'm not even sure how. I guess because I was on Bitfinex and I had an old drawing there. But it's interesting. And it'll help you kind of start to understand market structure. You have to get to a point to where the slope changes. And then eventually what will happen is hopefully, maybe it doesn't have to stop out here. Like I said, it could just make a higher high, which would be terrific. But if not, you'll see a stop somewhere in this area, peel back down, and then your level will be to get back above this level. Now, you won't have to take out this level anymore, which is that 8,500, if you touch this line. So say we touch this line right here at 7,500 even and start to peel back. Now, we just have to take out 7,500 to change the market structure. But as it stands right now, this would not officially take it out. That's people that don't understand technical analysis and how it works. They can say it. I know a lot of people will say it. I know the majority will say that. That is improper. It does not work that way. And I'm sure I'm in the vast minority of people. But I know I learned it the right way as well. And I've known that I've done this for many years and there's been no issue. It always works that way. It's not a coincidence that it absolutely, trust me, back here, I circled this box. Really, it should have been something like that, right? Because people were saying the same thing here. They were saying like, oh, look at this. This is the, people were bullish. I don't know if you remember, but there was a bullish action. We dropped all the way down to 13,000 and rebounded up to 16. And then, of course, you had the dump because you had to get to a sharper line, and that happened here. And same thing, these moves didn't matter. They're all part of this same structure that finally bottomed there. This is one structure right there. And then that rebounding structure was to there. Same structure. This wasn't anything. This isn't any type of higher low or anything along those lines. On a lower time frame, sure. If we break it down to a 6 hour, then you could start talking about time frame structures within a lower time frame. But on a daily scale, absolutely not. This is just normal movement within the action, and then finally you get the pivot here and move back. So slope matters a lot. Slope matters dramatically. What this also implies is that regardless of what is going to happen, this is seller exhaustion, right? The sellers were able to push it down sharply, and you got back down. The buyers came back to 38% level. Buyers got back to 36% slope, 15% slope, 12% slope. Why is that happening? Because the sellers are exhausted. Really, in these areas that you're seeing here, these are the areas that the sellers should be able to take it down, right? If there was more sellers. But what you see here is a collection. Now, just showing you what I'm talking about real quick. I'll add to this. I'm sorry for going off subject, but I think some of this is useful information to some of you. If not, if I bored you to tears, forgive me, but sometimes I go off on a tangent. So what did we see? For sure, what we saw here, here, and here. These were catch zones for someone. Smart money, right? No matter what, smart money, because it's not like they held from here to here. That's not the case. Someone, not just one, a lot of people decided, they drove this thing down and they parked their buys in this area, and they took on, I don't have the volume chart on, I'll bring it on. Bitfinex isn't the best. Do I even have volume on this? Sometimes I take them off because I don't want to have too many. Oh, there it is. It's kind of hidden. All right. So look at the volume. I mean, it's just unbelievable, right? So you get this unbelievable volume. So someone caught that. They just were willing to take it in. I can remember back at that moment, I called us a temporary bottom at that time. Not to take credit, I'm just saying a lot of people did, but ultimately that was the case. And while we were climbing, people were bearish. People were so bearish. This is on lower time frames, inverse head and shoulders, and it was a fractal that kept appearing over and over again. But regardless, you had people bearish throughout this whole move. Tone Bays, guys like that. From 6,000 to 12,000, they were bearish, and that's okay. It's okay to be wrong. Wrong is wrong. It happens. They made a call and they were wrong. No big deal. But the idea is that they were in a situation to where they just weren't ready to see it. You know, you have bare eyes. You don't want to have bare eyes or bull eyes. You just want to have eyes that kind of can read the market. That's most important, because you're going to get a bias and you're going to miss out on a 100% move. This was a 100% move. This was happy days, right? This is a beautiful time to trade. But anyway, the point I'm making is that there was a collection here, right? Now in here, there was a mini collection of shares right there, and it bounced a little bit, but it failed. And basically you call this accumulation, right? It's accumulation period. You started to see some of that as well, but this was more of a distribution than an accumulation. And we'll get into this. This is something you're going to be taught in detail because it's extremely important. But here was your accumulation. How we know is that they took on everything that they were willing to sell, right? And then you bounce. And then here, no, this ended up, you started to see some accumulation, but really they sold it all. They were out. Now you got back to this level, and what happened? Huge down candle to this level. So why did this thing hold sideways? I remember when it happened, it didn't make a lot of sense to many. You see really what's a lower volume, right? Check this out. You usually see that, hey, when selling occurs, you see like an increase in volume. This is something that has what's called a Wyckoff. Okay, we're not going to get into that right now. I don't want to confuse the life out of you. But you see this low volume. You start seeing a couple areas that had some spikes of decent days. But for the most part, this volume is low. That's because people were parked in this area and they were willing to take on everything they could sell them. Any weak hands at that time, and weak hands doesn't mean you sold. Weak hands means that you had a buy position, and at that time you decided to give it up against what your original plan was. That's all. Might have been a smart hand. You know, maybe that was smart because you were in here and you sold there. So when you hear these expressions, don't look too deep into them. But the idea is that they collected in this area for sure. It was a catch zone. Now maybe they dumped here, but it happened. And it happened over a long period of time, and that is a beautiful accumulation, and you had a nice rally from there. Now this came down, and people probably thought this was a little bit of accumulation because you saw a bounce, but no, they sold off, and then you got into this long period of time again. And the reason I'm showing this is that it's easy to get confused. Now you saw the volume here. Look at the line I just put. This is an average volume, this orange line here. So this was the average volume during that time period. But if you scoot over to this area, I want you to stay here and just look at this line that I'm putting on the screen. Relative to that time frame, the volume dropped significantly, but it's way higher. It was about right there compared to this average volume. So this was a massive accumulation yet again. Massive. So you had this massive accumulation, and then again a huge run-up. It's important. Someone at these levels has been catching, right? So the question is that what is going on again? Here you had an increase of volume. See, this is Bitfinex. Can we trust it? Who knows? That's another thing with crypto. You really never know till you trust these volume numbers. But here, not so much, right? An increase. So although this looked like an accumulation, it had some characteristics of it, and you had a rally, but you had a sharp decline. So what happened? I don't know. I'm not sure. I guess basically it wasn't time, right? We showed that it didn't reach this level. So ultimately you've fallen back in. So the question is now, are we in another accumulation period? You're seeing that lower volume. Basically we're going to find out. There's no need to guess. When you get into these type of situations, it could very well be, and we'll know very soon what we're looking at. But whether that's a few days or a few weeks, we'll be here obviously together and we'll figure it out. Anyway, I know I made this thing go very long. I started to talk about some different subjects. We'll get back into where we were in terms of learning how to trade, and back into what we were talking about, using some hike and ashy candles and things of that nature to your benefit. You don't always have to use that. In the future, obviously, you're going to learn various techniques that are going to assist you so that you don't. But if we start with those techniques, we're going to get into 6 weeks of explaining each and every element of what you're going to learn eventually later anyway. So it's easier to show this because you'll have a better concept and understanding when you get the specific material that's coming. Okay, so not to confuse you too much, but that's that. I hope everyone's doing very well. Continue to give me the feedback. I love the fact that people are very happy with the last video. If there's anything you can think of, let me know. I'll try to address it, and we'll go from there. We'll talk very soon. Hope all is well.